Okay, so what in the world just happened? Overnight, global markets got absolutely rocked by a geopolitical bombshell that, frankly, almost nobody saw coming. We were hours, literally hours, away from a critical deadline, and then, bam, the US and Iran agree to a ceasefire. And that single event pulled the world back from the brink and unleashed a tidal wave of money across the globe.
And if you want to see the first and wow, most dramatic signal of this massive shift, here it is. U.S. crude oil didn't just fall, it plummeted, down roughly 15% in a single day. I mean, to put that into perspective, that is a monumental, truly historic move for the world's most important commodity. It's the market screaming one thing, loud and clear. The fear is gone, at least for now. So, to really grasp the sheer scale of this relief rally, you first have to understand just how close we all were to a potential disaster. This wasn't just some background noise for the markets. This was a full-blown crisis that had the entire global economy on a knife's edge. Let's just do a quick rewind, because this thing escalated fast. It all started with hostilities in late February. Then in March, supply through the Strait of Hormuz gets choked and oil shoots past $118 a barrel. The world was literally counting down the hours to an April 7th military deadline. And then, completely out of left field, Pakistan brokers this Islamabad Accord, a very fragile 2-week pause. And that brings us to the market's reaction. What we witnessed was the violent and incredibly rapid unwinding of what's known on Wall Street as the fear trade. This is what happens when all the capital that had been hiding out from risk comes flooding back into the market all at once. So, the crucial concept to understand here is this idea of a geopolitical risk premium. Just think of it like hazard pay for your money. For weeks, investors were demanding a huge premium to hold anything tied to the global economy, especially oil. Well, the ceasefire announcement acted like a giant switch, instantly turning that premium off and erasing billions in value from that fear trade overnight. And this chart just brilliantly illustrates that rotation of money. As oil, which was the epicenter of all the fear, collapsed, the broader stock market, the S&P 500, surged. But look at the real winner here. United Airlines, up almost 14% in a single day. Why? Well, for an airline, jet fuel is one of their biggest, most painful costs. A 15% drop in oil is like getting a massive, totally unexpected tax cut for their entire business. And make no mistake, this was not just a U.S. story. This was a global risk-on rally. I mean, sure, the Dow surged over 1,300 points, but the real story was over in Asia, a region that is completely dependent on Middle Eastern oil. South Korea's Kospi just rocketed up nearly 7%. We saw similar explosions in Japan and Germany. What you're seeing is a worldwide sigh of relief priced in real time. But here's the hidden signal, the really interesting part underneath the surface of this rally. While Main Street was celebrating, this news sent an absolute shockwave through Wall Street. It caught the so-called smart money completely and totally flat-footed. And you don't have to look any further than Goldman Sachs. Just a couple of weeks ago, their analysts were calling the situation the largest supply shock in history and were aggressively raising their price targets for oil. Fast forward to April 8th, and that entire thesis was just invalidated in a matter of hours as Brent crude collapsed. It's a perfect and kind of painful example of how quickly geopolitics can just upend even the most sophisticated financial models. So if the experts were so wrong, where do we possibly go from here? Well, the market is now facing a brand new reality. We are on a 2-week tightrope. The immediate panic is gone, sure, but the next 14 days are absolutely critical, with two very, very different paths now in play. So here they are, the two paths. The bull case is that peace holds. In this scenario, analysts see oil settling into a much more manageable $80 to $90 range. That would seriously calm inflation fears and bring back what Morgan Stanley is calling a classic risk-on environment. The bear case? The truce fails. If these talks collapse, experts are warning that oil could surge right back over $100 almost instantly, and we are right back to square one. And honestly, this quote from Brian Jacobson at Annex Wealth Management just perfectly captures the market's mood right now. Is it just kicking of the can down the road? Who knows, but it's good enough for now. It's that profound uncertainty, that good enough for now feeling, that's defining every single trade at this moment. All right, so let's bring it all home. What does all of this actually mean for you as an investor? How do you navigate a market that's just experienced this much whiplash and is still walking this tightrope? Let's distill it all down. Okay, first, the extreme worst case scenario. We're talking $150 oil. That's off the table for the moment. The market has fundamentally shifted from pricing in an active war to pricing in a very fragile peace. And that means volatility is absolutely still the name of the game. So the mood out there isn't celebration, it's what we call cautious optimism.
Which brings us to the final critical question we have to ask ourselves. The market priced out the fear of all-out war in just a matter of hours, but in its rush for relief, is it now underpricing the very real risk that this fragile peace could shatter? That right there is the billion-dollar question hanging over every single trade today.